The proximate cause of this banking turmoil in the United States and Switzerland in March 2023 is a confluence of rising interest rates, unrealized losses in debt securities portfolio, and other idiosyncratic risks. Financial markets remain volatile as uncertainty over future monetary policy path is keeping market sentiments on the edge. New Zealand has earlier today increased its rates by 25 basis points. Food and energy insecurity and risks of debt distress pose downside risks to outlook for emerging market and developing economies, that is EMDEs. According to IMF, 39 low-income developing countries are in debt distress or at the risk of debt distress. On the upside, global growth is being supported by the easing of supply chain disruptions, gradual normalization of energy and food markets, easing commodity prices, and reopening of the Chinese economy. Global inflationary pressures are also showing signs of abatement, although they remain well above the target in most of the countries. Central banks across the world have continued to tighten monetary policy, though at a much slower pace relative to the aggressive 75 basis points rate hikes which we witnessed in 2022, while some central banks have even taken a pause in their recent meetings. We have a case of Canada which took a pause and then again went for an increase. So therefore, global monetary policy is still settling down because the inflationary conditions are fast evolving. And all central banks are watching it with what I call an Arjuna's eye, or what others call a hawk's eye. As central banks raise interest rates rapidly to contain inflation, fault lines emerged in banks and non-bank financial intermediaries. The resilience of the global financial system has been severely tested in the recent times, following the banking sector turmoil in the United States and in Switzerland. Naturally, it resulted in financial stability concerns, not only in those countries, but all around. Quite naturally, the outlook has been adversely impacted, particularly in the advanced economies. The proximate cause of this banking turmoil in the United States and Switzerland in March 2023 is a confluence of rising interest rates, unrealized losses in debt securities portfolio, and other idiosyncratic risks. Coexistence of high inflation and banking stress is complicating the responses of central banks as they face a trade-off between the risk of either straining financial markets or having to tolerate longer periods of high inflation. Amidst these global uncertainties, the Indian banking system remains stable and resilient, with strong capital and liquidity positions, improving asset quality, better provisioning coverage, and improved profitability.